This is the Weekly Market Roundup on the Rural Radio Network, brought to you by the Nebraska Soybean Board. I'm Alex Makovica. A number of things that the ag commodities are watching this week. We have a plant shutdown in Amarillo, Texas, big report on Monday for the grains, and a whole lot more going on with U.S. and China. We will dive into all of those factors with Ross Baldwin of agmarket.net and Doug Simon of Tredas right after a message from our sponsor.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
And welcome back. I'm Alex Makovica. Again, our guests, Ross Baldwin of agmarket.net and Doug Simon of Tredas. For those of us joining us online, you can see them on the screen now. Gentlemen, thanks so much for joining us and breaking down this week a number of things happening. Ross, let's start on the livestock side because we've got a couple of things going on. Lower cash trade for the second week now in a row, something we haven't said for a really long time now. Also a strike at a big plant in Amarillo, Texas. Talk more about the livestock market right now and how that's shaping up.
Hey, Alex, thanks for having me. Yeah, it's been no shortage of volatility across the cattle markets as we've seen for the last several months, but even this week we're seeing it play out again. You talked about cash trade being lower here again this week, and it was really surprising how much lower it's been in the north up in my area. I'm in Iowa, but we've seen northern trade anywhere from $4 to $5 lower in a lot of spots here. Southern trade again has been around $4 lower, $5 lower versus last week's trade. And that's, as you said, something we haven't seen for a long time. We had that period where cash was higher for 8 straight weeks. And this is definitely something that to keep an eye on. And I thought over the last week or two, that's been what's weighing on the futures market. And you talk about today, the strike that has been issued down in Amarillo, and that plant has actually been dark yesterday and again today. And we're seeing that play out in daily throughputs across the industry. And while normally you would think that's pretty negative news, the futures market today is ending the week on a pretty strong note. You've got August live cattle $4 higher on the day, and over in the feeder cattle market, they're over $4.50 higher.
Doug, let's also bring you into the conversation while we're talking about futures for the first day this week. Friday, it looks like grains are going to settle higher, but there's been some pressure on the markets this week. What's behind that pressure? It sounds like there are a number of things this week.
Well, we had a nice finish last week, and then the bombing of Iran on Sunday night. Oil was up 3% to start the night. Heating oil was up 5%. By the end of the day, oil turned around, was down 8%. We had a $10 range in oil, back in the 50, 65 level. We're still above the lows that we put in earlier back in March, but that had a big impact on it. And then also the rain that's coming in. We had pretty heavy rains in what I would consider to be west and kind of northeast Nebraska. Southeast Nebraska didn't get quite as much as some of those other areas, but also major corn growing areas in Iowa, even into Illinois. So, variable in some areas, pretty good rains generally, but that definitely pressured the market. Not as much heat. Last weekend we were 102, 103, 104, had pretty high winds, and then now the outlooks are definitely cooler, not quite as hot. But again, going out into the 30-day forecast, the models have still been keeping that warmer than normal, below normal precip. So it's going to be a question longer term what July and August turns out to be, but June's turning out to be pretty favorable to the corn and soybean crops.
Sure. Well, we got news of I won't call it a trade deal, but talks between U.S. and China on Friday were happening, could impact soybeans, could impact pork. So let's start on the grain side of things. Doug, as you see it, what was the news that was impacting ag commodity markets? Because as we talked before we came on the air, nothing specific about commodities was mentioned, correct?
Correct. It was more about semiconductors and other outside trade, rare earth minerals and other things. But as we talked before the show started, it's just more of a positive tone where we can try to get something done in trade, and we're not going to be battling as much. So I think the overall tone's definitely more positive. People are asking about, the first year of the trade deals. Are they going to fulfill that? I'm more optimistic about going forward than, looking back, that hopefully they'd start buying our beans again. Brazil's got plenty of beans. They're going to have a big corn crop. But if we can at least be in the picture of those, that would be nice to see.
Ross, let's bring you back into that conversation too on the topic of U.S. and China. Pork probably keeping an eye on those trade talks, but what else do you take from the livestock side of things?
Absolutely. For pork, we yesterday had very solid weekly pork sales across the market, and China was listed as a buyer of U.S. pork then. So they've been not huge buyers of U.S. pork lately, but I mean, it's definitely something that would be positive for the pork industry. And then over for the beef industry, China's been completely absent really since this last early March. It has been. China, and this started a while ago, they last year opened an anti-dumping investigation into all beef imports into their country. And when the U.S., most of the beef exporters into China, their licenses came up for renewal in March. And with that anti-dumping investigation that was going on, China did not renew a lot of them exporters, their licenses. So there's very few U.S. companies right now that can export beef into China. And so if we can see something positive come out of this, but you got to get further down the road to when they conclude this dumping investigation, which a lot of people are thinking it could take until August for that to occur. But it would certainly be good news, especially ahead of August, if that concludes over there and you can get some positive talks between China and the U.S., because China over the last 3 to 4 years has been a major buyer of U.S. beef.
Well, let's keep looking into this future with the conversation we're having here today. Again, joining us on the Weekly Market Roundup, Ross Baldwin of agmarket.net and Doug Simon of Tredas. We look at the week ahead, maybe a couple weeks when it comes to slaughter capacity. Ross, we mentioned this processing plant in Amarillo going dark. We've already seen reduced slaughter here for quite a while now. What are important numbers do you think that we need to be looking at? Is the trade really going to keep a close eye on it? What do you think?
I think the trade will certainly keep a close eye on it. I mean, like I said, right now today, the futures market is largely unfazed by it, but we've had a pretty sharp sell-off over the last couple of weeks across fats and feeders, and the fundamentals, they're not changing right now. And I think a lot of today's support that you're seeing is we had August live cattle and August feeder cattle both get down close to their 50-day moving average here recently, and that area has been key support for quite some time now. And with where the sell-off's gotten down to for fats and feeders, we've got such a historic discount, the futures market, to where the cash market is, especially on live cattle. And I think you just get to a point where the futures feels like that discount can only be so much. And I think that's really what's supporting us today. But you get out into next week, I think the market's definitely going to be watching this strike, because if this strike were to drag on for an extended period of time, that's a large packing plant down there in Amarillo that could, no question, start to back more cattle up down in that area.
Speaking of next week, Doug, on Monday morning, typically some big numbers coming out from the USDA with stocks and acreage reports. What numbers are you looking for? What do you think the trade is watching here on Monday morning?
Big question on acres going to be with the drier conditions we had to start. We planted maybe a touch more corn. There were some thoughts, maybe a touch more soybeans from a couple of commercials that are out there. Maybe a drop in sorghum acres, definitely a drop in cotton acres down in the Mid-South because all the wet weather they had down there. But nothing, too extreme, just because, prevent plant might be 3.2 million acres, like on the average of what it's been the last 4 or 5 years. So we don't have anything major in that regard. I don't really see those acre numbers changing a whole lot. It should be pretty quiet. The bigger question would be on the stock side of it. When you look at the corn side, we always have a hard time estimating the feed amount with the reduced, supplies of cattle. We're feeding them longer, so you're feeding out to bigger carcass weights. You're feeding a lot per head, but we're still down on where we were last year from cattle. And so the question is, USDA's got maybe a too aggressive number on the feed number. Contrast that to ethanol. Ethanol could be a fuzz higher, and the exports have been really strong on the corn, and they could be maybe 100 million bushels higher. So all in all, you add 100 million to exports, you drop maybe 100 million on the FSI feed, seed industrial use, and you're basically kind of flat at the end of it. When you look at the balance sheet, they don't update the balance sheets on Monday, but when those numbers come out, people will immediately adjust their balance sheets on their heads and start trading. Soybean side, we don't have the big feed discrepancy that we have on the corn side of it, because we crush soybeans, and those numbers all come from the crushing plants. And the question there is, are exports going to match up to what USDA is saying? Maybe a fuzz less than what they're thinking, could be just a minor adjustment in the kind of export number, but not a whole lot on the soybeans. That's really kind of the things I'm looking for in that report. There's times where that report there can be some bigger adjustments in it, somewhere 100 to 150 million bushels, either higher or lower. We tend to maybe go higher on the corn. The beans tend to be more minor, but we've seen some years and years past where they do come in with some prizes in there where they're making some back adjustments. And with the way the basis levels had been so strong, 2 years ago on corn, and now we've seen kind of basis levels jump up here in the last week, which may be a function of the futures market falling down, but we have seen some basis levels firm up in Nebraska and in Kansas, and as they search for some corn out there. So I think it's going to be interesting to see what that stocks number says on the corn.
Absolutely. Well, let's round it out with this, gentlemen. Doug, your final thoughts as we think about perhaps the rest of the growing season. What are going to be some important things to be watching here in the future for producers?
Just really going to watch where rains come in here. If the heat and the rain, kind of forecast would verify for that July, August, and see how the crop finishes out. I know everybody's pretty optimistic about it right now, but out here in Nebraska, we see a lot of variability in that. So we'll be watching that. But from a big picture, I was on Market Journal last week. I talked a lot about the Arc County and the PLC, your farm program benefits that you have right now underneath wheat and corn and soybeans. We're bumping up against that. And so we've been more aggressive getting stuff priced early in the spring. Now I don't know how much you want to price at this level, because you got a free put from the government essentially at these levels. We talk about that quite a bit in terms of what's your risk at this point. So if we do get some type of rallies, we'll want to be more active selling. But at this point, probably slow down on that, because you got a free put from the government on whatever your base is. And that's always a big question. We tend to have big corn bases in Nebraska relative to what we plant. So we have good protection on our corn, but not so much on the beans. So you got to think about that. But that's probably a big idea to keep thinking about as we go through the marketing year.
Yeah, absolutely. Ross, what about you? You think about, we get through the fall here for cattle producers, perhaps on the pig side. What's important to watch here?
I think right now for cattle producers, one thing to think about is getting some of your feed needs locked in. I mean, corn's at a very manageable level, and I mean, cost of gain with low $4 corn in a lot of areas up here in the north. I mean, it works tremendously well with where the cash markets are at. But I mean, really over the short term here, the next couple of weeks, I think you really got to continue to watch this cash market, watch how this strike plays out down Amarillo. I really think that could, while the market's not trading that today, if that strike were to drag on, that could weigh on the cash prices, the cash markets in the South, and eventually have an impact on the futures market. And I think from a technical perspective, this 50-day moving average for August fats and August feeders, which for August fat cattle's it's in the low 209 area. And for August feeder cattle, it's in the low $3 area. I think that's a crucial area of support. And as long as we can hold that, we're probably in good shape. But if we would start to maybe see some of these negative outside stories have an influence on the market more so than what we're seeing today, if we would start to see some closes below that and cash work lower, I think there could be some reason to have a little concern. So managing risk for cattle producers at these historic levels is key.
Very well said, gentlemen. Ross Baldwin of agmarket.net joins us, in addition to Doug Simon of Tredas, for the Weekly Market Roundup, brought to you by the Nebraska Soybean Board. As always, gentlemen, thanks so much for your time. We appreciate it.
Thanks, Alex.
You're welcome. Thanks for having us.